Felix here. How long is this bear market going to last? That's what you and most stock investors are wondering. And I'm going to show you why it is going to end much sooner than you think. Yes, that's exactly what I said. I believe very strongly that this bear market isn't going to last and we are going to see a rebound and a rally because inflation is actually transitory. Yes, there I said it. I agreed with the J. Powell, and I'll show you why. Not because they did some magic, but because of statistics, essentially. Let me show you the facts and the statistics, and you can look at it and come to your own conclusion. Before we do that, make sure you get your pause on Goldman's top 23 dividend stocks last day for that benchmark. Go to felixfriends.org/23, felixfriends.org/23, download. It's completely free. And oh my God, look at the greatness of this disclaimer. It is not financial advice. No, it isn't. And I think you knew that. Now, I could show you all the doom and gloom, like German electricity prices are the equivalent of $1,000 a barrel, but that's not what the video is all about. I could also show you that the futures market is totally in the doldrums, basically at levels of the COVID crash. But that also isn't really what I want to show you about, talk to you about, though that is interesting to see how low we've come. What I really want to show you is this line. And this line is the most insightful line you will see all week. Why is it the most insightful line? It's just the blue line, isn't it, Felix? No, not quite. This is the change in seasonally adjusted consumer prices. This is the Fed's measure excluding food and energy. And because they can't control really food and energy, that's basically commodities. So what does it mean? Well, in August 2021, this is really, really important. In August 2021, we had 3.6% essentially of this inflation. And then right now, we are where? Well, we are about to get August 2022 data, right? We haven't got it yet. We're waiting for it. What happened after August 2021? Well, inflation really picked up. Right? It went to 5.5%. So far, I'm not telling you anything new. But if you understand how inflation measures are calculated, it is compared to the previous year. So given that last year in September and then in October, so September was there, October was up there, this is 2021. What does that mean? Well, for inflation to be substantial this year, we would need to have, compared to last year, another 5% or 6 or 7 or 8% inflation. And is that likely? No, it isn't, because a lot of this inflation is baked in, it's priced in, wages aren't spiraling like mad. There isn't really this underlying continuous massive increase in everything, in housing and so on. It's just it's gone up a lot because somebody went out and printed 40% extra United States dollars. That tends to cause inflation. But you reach a plateau. And once you reach the plateau, once you reach a really high level, it is harder to go up more. Why? Because it's a comparison point to the same month last year. So this period here of massive increases makes it much, much easier for inflation numbers to come down and look like they're improving. Now, you haven't made stuff cheaper, but that never really happens unless you live in Japan. And what it does mean, though, is inflation is going to moderate by itself. So really all you need as a central banker, as a government, is you need to make sure inflation doesn't, after it's gone up for 12 months later, it should kind of moderate itself unless you are continuing to print money like a mad person or, you're in Zimbabwe or somewhere like that. So this is actually going to take care of itself. And of course, the Fed's going to take the credit for it. Biden is going to try to take the credit for it. And what you can see now is these are the probabilities of rate hikes that the Fed's going to give us at each of their meetings. So we've got the meeting dates here, and we've got the level of increase at the top. So right here, right now, we're expecting in September to get up to 3%. And then you can see we're expected to go up to 3.5. And then in December, the market's kind of torn between it being flat or increasing a quarter point. And then going into 2023, essentially the market thinks rates are going to stay pretty flat. This is therefore priced in. This isn't really a massive surprise. So what's going on today is really, well, a little bit of a movement upwards, and I can show you exactly what that is. So for the middle of next year, because what Powell really said is not the rates are going to go up more, but he said rates are going to stay high for longer. That was the whole message. Now, the current is the blue line. So the dark blue line here is right now, right here. A day ago is that one. A week ago is a little bit more interesting, which is the light blue line here. So a week ago, about 25% of the market thought we would get to 3.75 to 4%. Today, that number has gone up to, let's call that 35%. So really, really significant increase here in that conviction. And even on the 3.5 to 3.75% a month ago, nobody in the world believed we would get there by July because everybody thought they'd be cutting rates by then. But now, pretty much consensus, 35%. We are going to be somewhere in this range, still in the middle of 2023. So that's really has been the shift, is that rates will stay higher for longer. But as soon as we start seeing that inflation disappears itself, which is what it is going to mathematically do, it's the the basing model, well, I think the market's going to recover from that. So what do we need to look for? Well, I would say October is a good one because it went up a lot. If it isn't October, it's November, because that's basically the peak of inflation. And it just accelerated the most in October and in November last year. So the comparative data coming out for this year should therefore be much, much better. That's why I'm actually pretty bullish on this. That's why I keep buying stocks. Of course, be careful, buy the right kind of stocks. If you don't know what they are, well, I'm super glad to help you. You may also join, of course, our coaching program. You are eligible for that, provided you have at least a 5-figure portfolio and lots of boxes behind you. I'm moving, stuff's arriving today. So book a call at felixfriends.org/coaching. Join the community. You can learn from me one-on-one and my coaching team, and we'll get you to smash your financial goals in just 90 days. We really get you there. Alternatively, join the Master Options program, which is 2,500 students, about 100 plus lectures. You get to see me trade live every week. You get all the strategy, everything you need to know, and of course, tons of support in our private chat groups. Write down that coupon code here, BuildWealth, felixfriends.org/options. And what do you got to do now? Watch the next video. You wouldn't want to miss out on that insight now, would you? Click on it.